guys. Now, so we were talking primarily on the yen pair, so we're going to be focusing on all the yen pairs. So first of all, we're going to start with the dollar yen. And as I have mentioned to you, that the dollar yen, I mean, see this number 80.24, I'm just going to move it for a second. This is the dollar yen. What happened last week, you had this big capitulation all the way down, and then it is the opposite of the chart of the Swiss franc. This is the chart of the Swiss franc. Take a look at this chart. This is the upside down within a couple of hours. This is the upside down of the chart of the dollar Swiss, or the Swiss index. And if I had, I'm sorry, the yen index, I'm terribly sorry. It is the upside down of the yen index. And you can see now that this is, on a weekly base, it is the upside down of what we have seen in the dollar yen. Look at this. So if I have a sell signal on the yen index, and now I look at the dollar weekly, and I see the buy signal. So now I have a confirmation from both, from the yen by itself and from the dollar by itself, and now from the dollar yen, that I have a reversal to the upside. So now I'm going to look for a way to buy the dollar yen, and I'm going to identify also points for me to sell the dollar yen if I am wrong. So my structural point is the 80.24 based on the dollar yen. Oops. Based on the dollar yen, guys, not the yen index, but the dollar yen. This means that this is my structural point, which is the 80.24. The market closed the week at 80.56. So this means that now before I have, like this is the guy, the question that you were asking for in the beginning of the session, Richard, is that what should you do right now? So if it's now trading at 80.56 and your selling point is 80.24, well, there's no reason for you to do anything about selling the yen unless it trades below the 80.24. So the 80.24, and you put the price on your chart like this, so that becomes now your visual trade plan. Now that is your visual trade plan. You're not going to write notes, you're not going to waste you put a horizontal line. If it's red, this means below it you're going to sell. You have written your trade plan now. You're done. That's planning. Now it's trading at 80.56. Now my structural short and my sell signal is the 80.24. So I'm going to go to my radar screen, and my sell signal is going to be 80.24. And it is also my structural point. Last week, for example, our selling point was 81.65, and the structural point was 81.12. So you would have taken a short last week without listening to whatever happening in Tokyo, and shorted from here from 81.65. That was your short from last week, and you would have taken all the way down, and you're done. You made a couple of hundred pips on the trade. So right now, our structural short in this case today is, the structural short is 80.24, and my selling point and my short point are one and the same. So that is going to be my selling point. As long as the dollar stays above this point, I am not going to be selling it. Okay. Okay, so where will I buy it then? Right now, if you put a gun to my head, I will be buying it at this moment because we're already above the, we closed the week at 80.56. Our selling point is 80.24, so I am above it with 24 points. So I'm not going to take the trade from here the long. I'm going to go to the intraday chart and I'm going to identify a buying point. Right now, as you can see, the trend is all the way up. This is our selling point. This is the structural point. So we're still above it. I have no reason to tell you. So where will I buy it here? I can buy above this high because I want to have a continuation to the upside, so I will be buying it. I want validation that the dollar is continuing up, so I'm going to buy it above the 81.16. So my buying point is 81.16, and my structure long is still from last week is still valid, the 81.12. So in this case, it's going to be my structure long, the 81.12, and that would mean it is the big buy point. Now, if I buy it above the 81.16, I have to give it a little bit of a breathing room. So my stop, I'm going to buy it over here. This is my buy point. Let me put them for you, write them for you. This is my buy. I'm going to put a capital B denoting the buy. I'm buying over here. And I'm going to place my stop below this structure point. So my stop is going to be below 81.80. So this is my long stop. So if I buy here, my stop is over here. I will go short below the 80.20. And in this case, because it's such a structural point, I'm going to put my stop right above the 80.20. This means I'm going to give it a little bit more room, but it's still the 80.20. So this is my structural short. So my stop on the short stop is the 80.24, is the same as, so I just give it like a few pips above it, and my stop and my long stop is going to be 80, I think 60 was the number. So my stop is 80.70, my long stop is 80.70. At the 80.70, I'm buying at 81.16, my stop is at 80.70. And so my long point is 81.12. I'll buy only above 81.16. And if I buy it above 81.16, I'm putting my stop below 80.70. So I'm risking about 46 pips on that trade. My short point is 80.24. My structure short is 80.24. And my stop, if I go short below the 80.24, I'm going to use the 80.24 as my stop. This means it's not, I'm not gonna, I'll just give it about 10 pips on the trade. Okay, and my structural long point is the 81.12. So if it gets above 81.12, you're going to be buying, loading up, and you'll take it for the long side. Okay, this is the dollar yen. Let me just stop the recording.